Hey everyone, welcome back to XRP Economic Radar. Right now, as I'm recording this, crypto traders around the world are holding their breath. In just hours, Kevin Warsh will step up to the podium for his first press conference as Federal Reserve Chair, and what he says could determine whether Bitcoin breaks out or breaks down. We're not talking about the rate decision itself. That's almost certainly priced in. What matters is the tone, the dot plot, and whether Warsh signals that liquidity is coming back or getting squeezed even tighter. This Fed decision crypto traders have been watching for weeks is finally here, and the setup couldn't be more tense. Inflation's still sticky, the White House wants easier money, and the Fed itself appears more divided than it's been in years. The stakes? Massive. Here's why this Kevin Warsh Fed meeting is different from every other FOMC event you've sat through. Warsh isn't Jerome Powell. His reputation is built on being a deficit hawk, a balance sheet purist, and someone who's historically favored tightening over easing. But he's walking into a room where the political pressure is intense and the macro data is messy. Bitget CEO Gracy Chen calls this one of the most important macro events for crypto in 2025, and she's not exaggerating. The old playbook, where crypto moved on crypto-native news alone, is gone. Today, Bitcoin, equities, gold, and FX are all dancing to the same macro tune, and that tune is conducted by the Fed. But here's the twist that most people are missing, and it's something we'll unpack in just a moment. Let's zoom out for a second and talk about how we even got here. Kevin Warsh took over the Fed chair role in a year when the traditional correlation between risk assets started to fracture. Gold and Bitcoin, two assets that were supposed to thrive in uncertainty, are the only major asset classes in the red for 2025. Bitcoin's down 27% year to date, gold's bleeding too. Meanwhile, the S&P 500 is up 9%, and small-cap stocks have rallied 19%. That divergence tells you something critical. The market isn't sure where liquidity is going next, and when markets are uncertain, they look to the Fed for answers. That's exactly what's happening today. Gracy Chen framed it perfectly in a recent post. She said crypto has become a truly cross-asset class in a way that older frameworks just don't capture anymore. Bitcoin doesn't trade in a vacuum. It reacts to dollar strength, to bond yields, to commodity flows. So when Warsh steps up today, he's not just setting policy for the US economy, he's setting the tone for global risk sentiment. If he comes across as hawkish, expect the dollar to stay strong and pressure to build on gold, crypto, and risk assets across the board. But if he sounds dovish, we could see a relief rally that lifts both equities and digital assets. The question everyone's asking, though, is whether easing would even make sense when inflation is still running hot. And that tension, that's what makes today's announcement so unpredictable. Now let's talk about what the smart money is actually watching. Analyst Haxkai made a sharp point on social media. Watching the rate decision itself is watching the wrong thing. Nobody expects a move today. The real signal comes from the dot plot, the Fed's internal projections for where rates are headed over the next few quarters, and from Warsh's body language and word choice during the press conference. Does he sound confident, defensive, open to easing if data shifts? Those nuances matter more than the policy statement itself. According to past research from XWin, Warsh is likely to focus more on balance sheet reduction than on rate cuts. That means he could keep short-term rates steady while still draining liquidity through quantitative tightening. And if that happens, risk assets, including crypto, could face sustained pressure even without a rate hike. But not everyone's bracing for impact. Investor Rand Nooner posted that he's mega bullish going into this FOMC Bitcoin price reaction. His reasoning? Any signal that the Fed isn't leaning toward a hike path could be enough to support risk assets, especially if inflation expectations start to ease alongside lower oil prices. That's not a crazy bet. We've seen Bitcoin rally on less. The problem is that Bitcoin has a habit of dumping after FOMC meetings, even when the news seems neutral. Haxkai pointed this out too. Bitcoin rallied from $59,000 to $67,000 earlier this week, but that move stalled out. There's still plenty of room to fall if Warsh's tone disappoints. That's why seasoned traders are being told to wait, to let the dust settle before making aggressive moves right after the Bitcoin Fed announcement drops. As of right now, Bitcoin is hovering near $65,000, down about 2% from yesterday, but still up nearly 6% over the past week. That's a classic pre-FOMC pattern. Choppy, range-bound, waiting for a catalyst. The question is whether that catalyst pushes us up towards $70,000 or back down towards $60,000. And here's what makes this moment even more charged. The broader crypto market is watching this meeting not just for short-term price action, but for clues about the next 6 months. If Warsh signals that the Fed is done tightening, that liquidity could start flowing again. That's the kind of macro shift that could fuel a sustained rally. But if he doubles down on hawkishness, if he makes it clear that balance sheet reduction is going to continue regardless of market pain, then we could be in for a rough summer. The implications stretch far beyond today's press conference. So what does this mean for XRP holders and the broader crypto market? Here's the reality. XRP, like Bitcoin and Ethereum, is now a macro asset. It's responsive to Fed policy, to liquidity conditions, to dollar strength. If Warsh strikes a dovish tone and we see a relief rally, expect XRP to move in tandem with Bitcoin. We could see a breakout above key resistance levels, especially if risk appetite returns to the market. But if the tone is hawkish, if liquidity stays tight, XRP could face renewed selling pressure alongside the rest of the crypto space. The correlation is undeniable at this point, and that's not a bad thing. It means institutional money is treating crypto like a legitimate asset class, but it also means you can't trade XRP in isolation anymore. You've got to watch the Fed, the dollar index, treasury yields, and equity futures. The game has changed. Beyond the immediate price action, there's a bigger strategic question here. If the Fed is genuinely entering a new phase, whether that's easing, pausing, or continuing to tighten, that shift will define the next macro cycle for crypto. We've spent the last 2 years in a high-rate, tight liquidity environment, and crypto has struggled to find its footing. A dovish pivot from Warsh, even a subtle one, could mark the beginning of a new bull phase. On the other hand, if Warsh stays the course and prioritizes inflation control over growth, we could be looking at an extended consolidation or even another leg down. The crypto market Fed policy connection is stronger than ever, and understanding that dynamic is what separates traders who survive from traders who thrive. So what should you be watching for in the coming hours and days? First, the dot plot. Look for any shift in the Fed's median rate projection for the rest of 2025 and into 2026. Second, Warsh's press conference. Listen for key phrases like data-dependent, patient, balanced approach. Those are dovish signals. If you hear persistent inflation, upside risks, or prudent to remain restrictive, that's hawkish. Third, watch how Bitcoin and equities react in the first 30 minutes after the announcement. If both rally together, that's a strong signal that the market is reading the statement as dovish. If Bitcoin dumps while equities hold steady, that's a sign of crypto-specific weakness. And finally, keep an eye on the dollar. If DXY weakens, that's fuel for crypto. If it strengthens, expect headwinds. This is the kind of moment that defines market cycles. Not the flashy headlines, not the meme coins, but the quiet macro shifts that change everything underneath. Whether you're holding XRP, Bitcoin, or any other digital asset, today's Fed decision is a pivot point. So stay sharp, stay patient, and don't let short-term volatility shake you out of a long-term position. If you found this breakdown helpful, do me a favor, smash that like button, hit subscribe if you haven't already, and drop a comment below with your prediction for how Bitcoin reacts to Warsh's press conference. Are we rallying to $70,000 or pulling back to $60,000? I want to hear from you. And if you want to stay ahead of every major macro event that moves the crypto market, make sure you're subscribed to XRP Economic Radar. We're here every day, breaking down the news that matters, cutting through the noise, and helping you trade smarter. I'll see you in the next one.